Hello and welcome back to the channel. In this video, I'm going to talk about how you can read the cash flow statement of a company. Cash flow statement of a company tells you how much cash is coming into the company and how much cash is going out of the company. If you're new to this channel, please don't forget to subscribe. And without further wasting time, let's head to Yahoo Finance, where I'm going to search for AMD, and AMD stands for Advanced Micro Devices. And in order to go for cash flow, we go to the financial column, and here we have the cash flow statement. In my last video, I have discussed about the income statement and balance sheet. If you're more interested, you can find the link in the description. Before I go describing each term one by one, I'm going to describe the last 12 months, which is TTM, trailing 12 months, which means the last 4 quarters number of the company. And another thing is the all numbers here mentioned are in thousand. Although you see here that this amount is in dollar, $3.8 million, but in reality it's 3.8 million into 1,000, which is $3 billion. Cash flow statement of a company is divided into 4 categories, and first category we have is the operation cash flow. This is operating cash flow, is the cash which is generating from day-to-day operation, and second on the list is the investing cash flow. And investing cash flow tells you that how much company is either spending on its own business or if they have acquired a new business. And third is the financing cash flow, and financing cash flow actually tells you how much either company has paid their previous debt or how much they have raised debt in this year to create, or let's say generate more operation cash flow. And at the end, we have the end cash position, which take into consideration all 3 cash flows from operation, investing, and financing. This is the overview summary. And now let's head back to operating cash flow, where I'm going to describe each term one by one. First on the list from the operating cash flow is the net income from continuing operation, and this amount is the $2.2 billion. This actually amount came from the net income statement, and income statement actually gives you how much, tells you how much company has generated cash actually from their operation. And in the bottom, you find the net income stockholder a common equity, which is $2.27 billion. So that's what is the top value when it comes to operating cash flow. Second on the list is operating gains and losses. And if you want to understand like the definition for this operating gains losses, this is actually this value is determined by the comparison of the original purchase price against the accumulated depreciation to the price it was sold. And so, for example, company has made a positive, generated a positive cash of $83 million by selling its PPE, which is power plant and equipment, in 2022. And on the other side is the earning loss from equity investment. And this is actually the money that is invested in a company by purchasing shares of that company in the stock market, and these shares are typically traded on stock exchanges. And here we see that company has generated 53 million from their equity investment, which as compared to last year, they lost around 56 million. So which is a very good thing for the company. Next on the list is depreciation and amortization. And this is a bit confusing for new investor, and that why do we have this value added back into the cash flow statement? So in order to understand, you add the depreciation back into the cash flow because it's not a cash expense for the company. For example, if you have bought a car which cost you $50,000, and let's say at the end of the year, the value of the car is around $40,000, but as you can see that this is not a cash expense to you, but it's just a loss in a physical asset value. So that's why company added back this $3.1 billion in the cash flow statement. And similar case is the deferred tax, and in this case they have to pay around $1.2 billion, so that's why it's in negative. And on the next on the list is the stock-based compensation. Stock-based compensation is a corporate way, and they use the stocks or stocks option to reward employees instead of direct cash. The next is the other non-cash items, which is 178 millions, which are not mentioned here on the Yahoo Finance cash flow. But if you're more interested, you can head back to the AMD website, and at the bottom you will see investors column, and here you go to the financial information, and here you will see the financial tables. And hopefully here you will find all about, you can see further about revenue, net income statement, cash flow, and also the balance sheet of a company. And you can go further in more detail if you are really interested into this company, and if you're going to invest, then you deep dive into the company and what's happening exactly quarter to quarter or year over year. So let's head back. Very important term is also the change in working capital. And change in working capital, if you see, has the formula which is current asset minus current liabilities. If you see a positive number here, which means company has sold its some fixed assets, but here we see that this number is still negative, which is somehow not good in a sense that is increasing year over year. And let me explain why it's increasing year over year. First thing is the very high value of change in receivable, which is minus $1.7 billion. And what exactly change in receivable is that, let me give you an example. So receivable is, by definition, is actually the money that is owed to company to its debtor. So if this value is negative, which means the amount or the money is not coming into the business. So it means the cash, less cash is flowing into the business and more money is being owed to the business. So since this money is being owed as a debt, it is not cash. So that is why an increase in account receivable is reported as decrease in cash flow, because this money is not coming in. So that is the reason. On the other side, if this number is positive, then it means the account receivable was being paid off faster than it was growing. So the difference is reported as a cash, positive cash, because the account receivable is being paid off, is a cash coming into the business. And since this is a negative number, which means when you see a negative number on the account receivable on the cash flow statement only, it valid is for the only cash flow statement. It means that the account receivable is growing faster than it is being paid off. So as you see, this number is increasing year over year because more money is owed to company, to its debtor, and as you see, this number is increasing. And similarly, this change in inventory is everything that the company has already paid $1 billion. That's why this value is negative, because this money is going out of the business or out of the company. And prepaid asset is already that they have paid for any kind of stuff and the company is going to use, let's say, in the next 12 months. And second thing is the change in payable and accrued expenses. Payable and accrued expenses is kind of a similar. And if you're more interested, you can go to the balance sheet, where I have explained a little more in detail. But this actually tells you this is amount the company has to pay in the next 12 months. So that's why this number is kind of a positive, because this cash company has not yet paid. And if we take all into consider $2.7 billion minus 1.4 minus 1 billion and minus 1.7, you will end up with minus $1.5 billion. So this at the end, if we add back everything, cash from continuing operation and depreciation, amortization, stock-based compensation, at the end we have a positive cash flow of around $3.8 billion, which is very, very important. Next on the list is the investing cash flow. And as I said, investing cash flow tells you how much company is spending on their own business, or if they are acquiring a new business to even grow their own, the company business, which is important if you have the cash for it, or if you're spending, let's say, a reasonable amount on another company, because that's a way you can grow your business. And what we see from the net PPE, which is the purchase and sale. And purchase of PPE mean that if they have bought a new power plants or equipment, and we can see here that this could be that they have bought a new machinery, a new office, and AMD has spent around $412 million. And we can see that company has been spending more and more on its own business, which is a very good thing. Next on the list, which is very also important, that how much the net investment purchase and sale, how much they have generated the cash from their investment. And we see here that they have generated a positive 560 million from their investment. And what we can see here that in the year 2022, which is the TTM, And here they have bought around $2.5 billion and purchase of investment. And this is not mentioned here what kind of investment they have made. As I mentioned, if you're more interested, you can go to the financial under the company or 10K filing, and you can understand what type of investment they have made. But since we can see that they have generated even a positive sale by selling the investment from, let's say, last year, or it could be previous year, but we can see that they have generated $3.1 billion from their sale of investment. At the end of the year, they have generated a positive $560 million. And we can see here that if they are spending a ridiculous amount, let's say of minus $5 billion, that would be a red flag, because company maybe does not have this much money that they can spend on purchase of investment. But since they have generated a positive cash flow from their investment, it is a very positive thing for the company. And net other investing changes, which Yahoo Finance doesn't have enough column, let's say, and this is a minus $24 million. And if we add back and from their investing activities, company has generated $932 million. Last but very important is the financing cash flow, and this part actually tells you how much if they have taken a new loan and how company is spending their cash. So here we can see that here company has a net long-term debt issuance. So the company has taken $679 million of long-term debt, and which is somehow a bit new for the company, because as we can see, the company has not taken a long-term debt in 2021, and they also paid a 200 billion last 2020 and 400 billion in 2019. But this time company has taken a long-term debt. This could be related to maybe increase their operation and to increase more income, but we will see what happens in the next year. And the very most important or concerning thing about this company is the net common stock uh, issuance. And as you can see, the company has uh, spent $4.5 billion by rebuying the stock. And it is a bit of a concern, which I will go through later, why that they have spent so much money instead, like as compared to last year, they spent minus $2 billion, but this time they have spent minus $5 billion on buying back their own shares of the company. It's a let me just finish the last term, that from the stock option they have generated a positive cash flow. And if we add back all these, we see that from the financing cash flow we have a minus $3.7 billion. At the last, the company has the in cash position, and this value is $958 million. We get this value by taking into operation cash flow, which is 3820. Then we add 932 from the investing, and then we minus the financing, which is 3794. And we end up with $958 million. And by taking the beginning cash position of the company, 2.4 billion plus this year cash flow change in cash, and the end cash position of the company is around $3.3 billion. And this is a good thing, that company should have a positive cash flow. If this is negative, which means company has not enough cash to spend for the next year. And the more cash they has, the better it is, that if something is not in favor of company, if they cannot generate positive cash flow from their operation, on the worst side, that at least they have enough cash that they can support the company for at least a quarter, or in best way at least a year or so. The capital expenditure term is important, because this is amount which is considered when it comes to free cash flow. And as you can see, the free cash flow is $3.4 billion. And how it is calculated, that you take the operating cash flow of the company and you minus the capital expenditure. And in case of AMD, you can see that from the operating cash flow, we have 3820 billion, and we can minus $412 million. And then the company has a $3.4 billion of free cash flow to spend, and now management of the company has free hand to do whatever they want from this cash for the company to make the decision for the next year. What is the red flag, I would say, in this whole cash flow is that the repurchase of capital stock. And the free cash flow company has is around $3.4 billion. But what we see here, that company has bought even more than that, which is a bit concerning. That why you are buying back your own share of the company if you do not have enough cash for it. So at the end of the day, what you have to look for is that you should see that the operating cash flow of the company must be increasing. And what we see here for that, AMD has been very successful in this regard, that they have successfully from year over year has been increasing operating cash flow, and it's a good thing that it's a positive cash flow. And if it's negative, in worst case, it means that the company is losing literally its money from its operation, and you don't want. In my opinion, I think you should not be investing into a company which cannot generate a positive cash flow. And on the other side, the company should not be acquiring a new business at a very high price what the company can afford. But it's always good that the company is spending more money back into their own business. So apart from the, let's say, the last TTM of repurchase of capital stock, I think this is a very not the best, but a good company, which has a good income statement, balance sheet, and also cash flow. If they could turn into a positive cash into, let's say, the coming 12 months or coming 2 quarters. That's it for the video. If you stay till the end, please don't forget to like and subscribe to the channel, would be highly appreciated. Myself is Adnan, and I will see you on the next one.